Seen any drones? I've seen all the drones. Droning along, waiting for my trades. And happy FOMC day, yeah, for sure. It looks like they're selling it off so they can buy it off. We'll see what they do. Guys, today is Wednesday, December 18th. If you have never seen FOMC, you're in for a treat today. Check for news every day, guys. This is a part of my routine. And I'm a big fan of routines, big fan of patterns and doing the same thing, because doing the same thing yields results. And every morning, go to forexfactory.com/calendar, and I'm looking for news. I'm looking for high impact. I'm looking for medium impact news. At 8:30 a.m., we had building permits. Didn't really do much. Really didn't do anything. Didn't affect it. But it could. So anytime I see that medium impact, I pump the brakes. I'm like, okay, I'm not taking a trade. I'm going to wait and make sure nothing goes crazy. At 10:30 a.m. for my crude oil traders, guys, we have crude oil inventories, and this is one that typically creates a reaction. Hey, good morning, Steve. This is one. Did you get everything taken care of with tech? I was wondering about you yesterday. All set? Cool. Crude oil inventories at 10:30, guys, and a lot of times in crude oil, all I do is trade patterns. I don't trade news, but you'll see them jockey for position almost before those releases come out. So anytime I trade crude, or back when I did trade crude, on crude oil inventory day, I was very aware, and I wasn't afraid to take some profits. And then, guys, at 2 o'clock. It is going to be fireworks. FOMC day, FOMC statement, economic projections, federal funds rate, press conference at 2:30. Guys, FOMC can make the market move so fast that NinjaTrader can't even pick it up. I have inadvertently traded FOMC, got myself in a long position, was stopped out, $2,000 slippage. And it looked like the market just went up, but it moved so fast it couldn't keep up. I think FOMC is the key to financial suicide if you try to trade it, if you try to predict. But you have to make your own decisions. My decision is I'm going to take my dog to the vet and, I don't know, go buy underwear or something. Welcome to all the new folks. Gary H., we got you in here. Good to see you. Trina Boy, it's nice to have you back. Who else? Do I have Max Man in here? Guys, this is your class. This is your class. If you're brand new, you're my focus. No offense, old people. And my first hour is 100% dedicated to the brand new user. My first hour is dedicated to simplicity. My first hour is dedicated to teaching you how to read your indicators. Good morning, Joel. Good to see you, man. And everything that I talk about comes from the Nexgen Software Services website, specifically the trading guide. So if I click on that trading guide, this is where all the answers come from, guys. This is where you learn to understand the indicators, trend, direction, termination conditions, entries. And this whole section is what I talk about for the first hour. And I go into great details to talk about one specific trade. I'm going to scroll down, hope that doesn't freak anyone out. The high probability trade. And I do this for a couple reasons. The first reason I do it is because this is a trade that typically wins 70 to 80% of the time when you follow the rules. This is a trade that creates confidence through that memory of success. And most importantly, this is a trade that the way it's taught in the room, the plan that I give you, it's designed to teach you to read your indicators and to understand that the goal of trading is to get paid. The market doesn't care if you look smart. The market doesn't care if you win or lose. The market doesn't care about you at all, guys. The goal in trading is to make money. The goal in trading is to win more than you lose. And the goal in trading, if you can pull it off, is to have a statistical advantage each and every time you take a trade. So this high probability trade, guys, this is defined when each indicator on every chart agrees for the rules of the trade. Triggers will be the strongest. There's no termination conditions, guys. Just nothing between you and your target. This is the best of the best. This isn't the only trade that Nexgen teaches. This is the first trade that I teach because this is the one that lays the foundation, and it does that Because it teaches you to read your indicators. You're going to learn to read your charts with me. That's kind of my goal for each and every one of you. I love it when you become accomplished day traders, but you can't go to trigonometry if you haven't taken remedial math, guys. And my first hour is remedial. It is talking about 3 trading rules, and it's designed to teach you to read your indicators. And what you're going to find is that 90% of your day is doing nothing. 90% of your day is just reading charts, waiting for advantages. 10% of your day will actually be trading. If you sit in front of your computer for 6 hours today, I hope you don't because it's FOMC, but if you do, you should plan on being active maybe 36 minutes of it, guys. So get a good solitaire game, maybe some video poker. Do something other than try to force the market to bend to your will. When you understand how to read your indicators, and that's my job, is to make sure that you do, you're going to understand where the market is likely to continue. You're going to understand where the market is likely to go, and you're going to understand where the market is likely to stop. And each of these concepts has likely in the beginning of it, guys, because there are no guarantees. There are no guarantees with trading. But here's the cool thing, and I think you're going to dig this. If you learn this first trade, this high probability trade, hey, good morning, Marty. This is the trade that typically wins 70 to 80% of the time. This is nothing more than a pattern, guys. It's a very recognizable pattern. And the pattern has been back tested, obviously, by Nexgen. Hey, Erla. Because I'm not going to teach you something that I haven't spent time on. But if you go back 100 trades and you find this pattern and you look at it, you record it, you recognize the advantages, you're likely to win 70 to 80 of them. And that's where that advantage comes in. This is, if you're anywhere near my age, you remember video games back in the 80s. And most of them had a pattern that if you followed that pattern, you didn't die. Like the enemy stopped shooting, the ghost didn't eat you, the gorilla didn't hit you with a barrel. And that's kind of what day trading is, guys. It's video games for those of us in our 50s. And if you learn the patterns, if you commit to learning the patterns and you follow the pattern, most of you are going to find an extraordinary level of success. But just like those video games in the 80s, if you don't follow the patterns, if you try to be smarter than the patterns, you're just going to keep pumping quarters in the machine. So this high probability trend trade is only 3 rules, and I'm a big fan of that. And I'm going to tell you right now, there's a little secret. The first 2 are the most important to you. The first 2 are the 2 you really need to commit a little focus and study on. The large chart needs strong trigger lines. That's rule number 1. And that's going to give me the advantage of momentum. Down here in yellow are the advantages that the rules create. Rule number 2 says no termination conditions. Those are those likely to stop areas. And when there are none, I'm going to have room to my profit targets, and we're going to call that the advantage of a clear path. Now, once you understand momentum and path, once you can say, as you look at your chart, I have the momentum that I need and there's nothing in the way, guys, that's when trading becomes easy. That's when trading isn't stressful. That's where it's just, you can't wait. You can't wait to enter the market with those advantages. So that's what I want you to focus on initially. Rule number 3 is specific. It's unique to the high probability trend trade, and it's going to define the point where the market is most likely to continue with the trend. It's going to define your entry area, and it's going to do it with amazing precision. These 3 rules come to be on only 2 charts. Are there more charts? Absolutely. And I'm going to go back to it again, guys. Simplicity. The less I have to think about, the easier it is for me to make good decisions. The more options I give myself on anything. Like I go to the Chinese buffet and I panic because there's just too much and it all looks delicious, guys. And trading is kind of like that too. So we keep it real basic for the brand new user. We're only going to use 2 charts. And it's important that you understand what each chart does for you. The large chart leads the way. The large chart tells you which direction you should be trading. And the large chart shows you that you have the advantage of momentum through rule number 1. And the large chart is where we're going to look for these key areas that could stop the market. And that's rule number 2, making sure we have a clear path. And all of this magical goodness comes from the most current bar, the first bar on the large chart. is all it takes to define direction, momentum, and areas. So I talk about these first two rules a lot. And I stress the importance of these first two rules because this is what lays the foundation for the rest of the trades you're going to take. The entry chart is a small chart and it's a faster chart and it's a refinement chart. It takes that one bar and just gives you an x-ray. It shows you all the little silly fluctuations that happen inside of it. And that's how we pinpoint where the market is most likely to continue. That's how you guys are going to be able to reduce risk and maximize your profit potential. And guys, this small chart is an entry chart. Don't confuse it with having the ability to define the direction or being able to tell you have the advantage of momentum. And don't let the small chart talk you out of trades with areas because areas are defined on the large chart. Large chart leads the way because the large chart is the large crowd. And you got to ask yourself, who am I trading with? Who am I trading against? Guys, fighting a large chart is like playing in traffic. It's just a bad idea because the big crowd, guys, the large crowd, they define the direction. They tell you which way the market's going to go. They create the momentum, that advantage that you need. And they react at those key areas. They're the ones that are making decisions at those lines on the big chart. Trading with the large chart is almost effortless in most cases. There is a small crowd. And guys, this is just an analogy. There's not a bunch of people in a parking lot making the market move. But the small crowd fights. They love to fight. They're hoodlums. And they create little retracements. They create these little pushes against everything that the large crowd wants to have happen. And your rule number 3 is designed to have you pinpointing where their failure is most imminent. And guys, they fail typically 70 to 80% of the time. So when you trade with the large crowd, when you go with their direction, when you use their momentum, when you don't trade into the areas they may react at, we just let the small crowd fight and we get in to go along with the large crowd, guys. And that's exactly what the high probability trend trade is. It's just pinpointing where you can continue with the trend. So we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. That's the first hour of every class. If you went back and looked at every YouTube video that I've made for the last year, the first hour is pretty much the same thing, guys. And I firmly believe that repetition creates recognition. The more times you do something properly, the easier it becomes. So I want you guys to simulate, and I want you to practice, and I want you to do the first step in becoming a confident trader ASAP, and that's post your pictures in the room, guys. Post your trades in the room. Post your questions in the room. Post pictures of your dogs in the room. But get in the habit of participating in my class because the people that post the most are the people that get to where they want to be the fastest. Every picture that you present to me is an amazing opportunity to get a private session. It's this awesome opportunity to talk about how you're reading your charts. It's this unbelievable opportunity to show me where you got in and where you got out and receive feedback live, 15 hours a week, 5 days a week, to make sure that you're reading your indicators properly and that you're getting the most out of everything that you do. So don't hold back, guys. Talk about the advantages on your chart. Show me what you did. Ask for help if you need it. We're going to simplify. We're going to talk about that high probability trend trade. We're going to focus on it exclusively for nearly an hour, guys. Your job is to know what looks you're going to commit to. And you've got to learn them so that they become easy. That's my job, is to teach you these looks and to reinforce and to give you the tools that you need. And by the end of this classroom, you will have in your possession everything that you need to be successful with the software, with the exception of experience. So experience is learning these looks and practicing these looks and using the spreadsheet that Nexgen gives you. And there's my spreadsheet right here. And I'm going to drop this in the room, guys. Anytime I drop something in the chat box, you can download it or you can just click it and drag it over to your computer, put it in a file. But there's 4 tabs on this spreadsheet, guys, and this is such an amazing tool. The first one is nothing more than a trade journal. What did you do? What were your advantages? How did it go? But most importantly, what was the feedback from class? What did Mark say about my chart read? What was the feedback on my entry, on my management? How can I do it better? And what happens is if you use this first tab properly, You don't just take a picture and drop it in there and forget about it for life, guys. Every morning you come back and you look and you say, wow, what worked? And what didn't work? So it sets you up to focus on these advantages, and it sets you up to focus on not making the mistakes that are taking success from you. And if you do this each morning, it's going to prepare you for the day. It will accelerate learning. And it's all here, right here for you. And what you'll notice is patterns that are helping you and hurting. Because feedback from class, this is how I stopped trading in determination conditions. I went back to my spreadsheet and 50% of my trades said traded into a line. And I was like, man, this may have something to do with why I can't seem to win. And sure enough, once I fixed it, trading got easier. So just embrace the positives and try to avoid the negatives and learn these looks. Let's go to the next one. That's the basic rules. This is your high probability trend trade rules, guys. This is the second tab. So you have access to all of these pictures. In the green sections, it's what it looks like to have your rules met. In the red section, it's what it looks like to not have your rules met. So here's the cool thing. 3 greens, I'm obligated to take a trade because that's what my plan says. If I have a red, it's okay for me to do nothing. If I have weak instead of strong triggers, it's all right to sit on my hands. If I have a termination condition instead of a clear path, it's encouraged for me to do absolutely nothing rather than try to force the market to bend to my will. Whoops, wrong picture. The next tab is the client trades. This is where I steal from you guys, and I don't feel bad about it. When you post great stuff in this room, when you post trades that have momentum and that path is clear and you nail your entries, I liberate it right out of the classroom and I drop it into here because, guys, I'm in a constant state of learning. And the more pictures I can look at, the more times I can see this pattern, the easier it becomes, and it literally slows down the market. If you've been with me for 30 days or more, have you noticed that the market doesn't seem to move as fast anymore? It's not because it's slowed down, it's because now you're recognizing these looks, you're recognizing these patterns, and you start to anticipate a little bit. So this is your perfect entry, long and short. Here's a way to manage it. Here's almost 400 pictures of Nexgen users using the software. You guys that are making the switch to NASDAQ, you've become a great chart reader, you can analyze quickly, you want to trade a faster market. There's a couple ideas on the trend trade there. And then the cool thing is when you learn to read your indicators, you begin to see things. You start to recognize patterns. And these patterns can help you or hurt you, right? Just a pattern is a pattern is a pattern. It's like a word. It only has power if you give it power. Patterns can keep you out of trades. Patterns can get you into trades. And you're going to begin to see more and more of them as you grow with the software. So make this final tab look like the one that I've put together for you. Start putting your perfect trades into this green section. As you learn to manage, start filling out this orange section. Maybe you learned a lesson about jumping out too soon. Go take 10 pictures, reinforce that lesson, and then take pictures of the patterns that you see. So we're going to keep it very simple. Guys, simulate, practice. Gary H., Trinaboy. Who else is new in here? I know I've got more people. Guys, force me to look at what you're doing. Force me to talk about what you're doing. And I promise you, we're going to work together to get you to where you want to be. So it's only 3 rules. And I love this. It's 3 rules. And some of you engineers, that's not enough rules, Mark. 3 rules can't possibly create a trading plan capable of winning more than it's losing. I'm telling you, it does. And the large chart leads the way, guys. Rule number 1 tells me that I have to let the large chart lead the way. Let the large chart define direction. Let the large chart define the momentum. And it defines direction just with colors. Green is up, red is down. And I think people think I'm joking when I say this. If you're colorblind, let me know. I'll show you how to bypass needing to see the colors. There's a lot of experienced users that don't even bother with the colors anymore because they know that it's all trigger lines. So in an uptrend, we're looking for rules to be met to go up, and in a downtrend, we're looking for rules to be met to go down. Strong triggers in an uptrend means that the smalls are above the large. That is what paints the background green. So if you're colorblind, smalls have to be above, which means that they should be green. And my large trigger should be green, and my background should be green. And when all the colors match, I have a better shot at having odds favorable momentum. That's strong triggers. Strong triggers means that the smalls, the solid lines, are above the large. I want you to picture scissors that have opened. There's space that gets created between the small and large. Both are wide, both are angled in the direction of the trend. When I have this look, the odds are favorable for the market to continue up. We call it odds favorable momentum, OFM. You'll see it on charts all day long. In a downtrend, when the background is red, my small triggers and my large triggers should both be red as well. If they're not, I don't have strong triggers. Smalls are below the large, large are wide. My scissors are open. That space between the two lets me know that the odds are favorable for the market to continue down. And guys, this is your best look. This is rule number one. I'd love to try and overcomplicate it, but I haven't found a way to. Let me open up the crude oil right here. This separation is strong triggers. It's always strong triggers. This separation is strong triggers. It's always strong triggers, no matter what the market, no matter what the chart, guys. And when I have strong triggers, it pushes a market. When I have strong triggers, it can break key areas. And when I have strong triggers, that's where I'm looking to use that refinement chart to buy or sell Fibonacci support and resistance. And it looks like a tail on that slow moving large chart. You're going to learn how to pinpoint right where that tail is most likely to form with rule number 3. And when you scroll back and look at these tails, you can say to yourself, there may have been an opportunity. Let me go back and study it. But momentum is not a forever thing. Very often it slows. Why wouldn't it, right? People take profits, people fight. Smalls work their way back inside of the large. This is your visual that things are slowing down. When the scissors close, you can no longer cut. You can just take a stab at it. These weak triggers let me know that anything can happen up or down. And guys, very often anything does in fact happen. Weakness is not an advantage. And weakness is where we start to see bigger retracements and where we start to see reversals. And weakness is where you start to see key areas holding. And if you look at a snippet, this is like a 4-hour snapshot of a large chart. It goes from odds favorable momentum and then it weakens. There's that ACH, anything can happen. Learn how to talk to yourself in terms of advantages or disadvantages. And it's that weakness where the reversal comes from. And then it creates that momentum. There's one of your tails. Everyone in this room pinpointed their entry and they rode that wave of momentum. And then eventually it weakens again and it reverses again. And then the sellers take over. There's your odds favorable momentum. There's a tail, down it goes. And then the fight happens, guys. And your rules are going to help you recognize fights you don't want to be a part of. Because when the colors don't match, when the large are red and the small are green, or when the background is green and the triggers are red, you don't have strong triggers. This is a transition. And it's easy to try to predict. Well, I'm going to predict what the market will do. You don't have to. You never have to, guys. All you have to do is let them fight it out, and eventually somebody wins. Eventually someone creates that momentum again. Remember that 90% of your day is doing absolutely nothing, and it's that doing absolutely nothing that typically pays dividends. So let's go to my most current bar on crude oil. And guys, I've got small triggers below the large triggers. My large triggers are wide. My scissors are open. Can you give me a why? Gary, Trinaboy, anybody? If you see that we do in fact have rule number 1 met, that we do have odds favorable momentum. But guys, this is only a third of the equation. That strength is awesome. But we have to make sure that we're not trading into a termination condition. And I appreciate the yeses in here, guys. I really do. I'm gonna let you in on a secret. Forgive me if I sound preachy. I asked the question not because I'm insecure about whether or not I'm teaching it correctly. I asked the question because if Irish MKC, when I ask about momentum, if he drops an N in the room, that tells me, hey, I need to do everything in my power to make sure that he gets this lesson. I need to find another way to say it to make sure that the comprehension is there. A we is good too. You are embracing the Louisiana. So guys, I do this not for me, but it's totally for you. So once I have momentum, I need that clear path. I need to make sure that I'm not trading into an area. And this is the most broken rule. This was my most broken rule. I was like a magnet to these things, moth to a flame. Termination conditions are areas that could stop the market, that could reverse the market, that could create an untradeable bounce. These areas on the large chart are where the large crowd are making decisions, guys, and this is where people are entering the market and taking profits, and these are where you find that buyers and sellers tend to fight. You don't have to know how they're created to be able to use them. You don't have to understand the math that goes into it. I certainly don't. But I know that a horizontal line on the large chart is where decisions are going to be made. And my advantage comes from not being in the middle of that decision-making process. So we're going to look for divergence highs and divergence lows, guys. And divergence means that if price pushed up and came down, we call this a pivot, when the market kind of changes direction. If there was a loss of momentum, if momentum didn't follow price, you're going to see that magenta line. And this magenta line later in life becomes a line in the sand that could stop the market cold. It could act as one of those termination conditions. If the market goes down and pushes up and there's a loss of momentum, you'll see a cyan line. And just on its own, it's nothing more than a loss of momentum. But it becomes a line in the sand, and that line in the sand could stop the market the exact same way that pink line did off the divergence high. We are looking for red Fibonacci resistance, and resistance could stop the market, it could create a bounce, it could reverse it completely. Blue Fibonacci support has the same effect when the market's in a downtrend. And then we look for yellow 1-to-1s. And guys, if you are a crude oil trader, if you are an S&P trader, these are your lines. These are your lines on the big chart where decisions are made, where the large crowd is likely to react. So there's a two-piece process to defining a termination condition. Let me go to my picture here. It begins with price reaching the area because that's what sets off the decision-making process. They may be thinking about it, but when they actually reach that line, that we're not the only people that know about them. Institutional traders, algorithms, they know where these are. Now you know where they are before you get to them. But once price reaches resistance, whether it's a red fib, a divergence high, or yellow 1-to-1s, the only thing that you have to do is ask yourself, where are my triggers? And if they remain below, if my trigger lines don't get above resistance, resistance is a termination condition. This is an area that could create a bounce. This is an area that could set off a fight. And if this area stops the market and reverses it, my large triggers roll, we call it a strong top. And a strong top is the precursor to the highest probability trend trade you can take. And I mention the strong top because almost every trade beyond the high probability trend trade requires this look to have rule number 1 met. So the market comes down, the sellers are in control, they're pushing, the momentum is overwhelming. And you can see that the momentum is going away as those scissors close, and then price reaches support. And when price reaches support, all you have to do is say, where are my triggers? It's easy, it's not a hard equation. If my triggers remain above, don't break through, guys, this is a termination condition. This could create an untradeable bounce, set off a fight, or the large triggers could roll from that termination condition, creating a strong bottom. And this is the precursor to the highest probability trend trade long you could ever take. This is rule 1 for HVA trades, for momentum trades, for white bar trades, for all the trades that you're going to begin to recognize once you build this foundation. So rule number 2 is not met when you have a termination, and it simply means don't trade into the area. And it's not a hard thing to do, but areas break. Areas break a lot, and it's fun to try to predict. It's easier to just let them break. When your small triggers and your large triggers finally get below support, support's considered broken. Your path is now clear, and your path remains clear until you reach the next area. So right here, price reaches, triggers are still above. I sit on my hands and I do nothing, and it's about 11 bars. There's the whole white box is my, I can't do anything until the triggers finally get below. And then support begins to behave as resistance. And very often, with this clear path, with that level of momentum, you're pinpointing that tail for an entry to continue with the trend. Price reaches Fibonacci resistance all the way here. I hope you can see my cursor. that area doesn't break until all the way over here. And once again, there's this waiting period, this 90%, where you're like, man, my rules say I need a clear path. Let me wait for that clear path. And then with all that momentum, you're going to look for your opportunity. But if you let it be that simple in the beginning, it's either a termination or a clear path. I want you to see something. We'll just pull back here a little bit. Resistance. And none of my triggers broke through. And you can see that it's coming from support as well, where none of the triggers. So resistance pushes us all the way down to support. And there's this little run there, and then support holds, and it pushes all the way up to resistance, and then it breaks, and then it breaks. And you can see how support behaves as resistance. And it goes right to the fib, and it stops. And it pushes all the way up to the fib, and it stops. And then the fight is on, and they can't seem to get anything done right at those key Fibonacci areas. You know about these areas. You don't have to trade into these areas. You just have to wait for it to break. Big bounce at support. Support breaks. They pull right back to it as resistance all the way down. And guys, this repeats itself all day. These tails on a large chart are fluctuations. Maybe. Let me see. I mean, I'm sure I can. It's been done before, right? System. Let me figure out which one it's at. It's not display, system, Bluetooth devices, mouse, getting there, almost there. Hold on. And guys, this is one of the things you can do. If you need me to adjust for you, I'll adjust for you. It's no big deal. Always happy to do it. Device settings. I'm looking for my mouse settings. Hold on, let me search it. Mouse settings. There we go. Let's do pointer speed, primary mouse buttons, roll, line, scroll, additional mouse settings. Here we go. We're getting to visibility. Nope, that's not it. Pointers. All right, hold on. Mouse pointer. There we go. I'm getting there. Check it out. How's that? Better? Squinting is only good at the beach. Can you see that better, Ron? That's huge. That's going to freak me out, but that's okay. Guys, I want you to see something, and this is pretty cool. So all of those little tails on the large chart is where on the small chart there was an up and down. On the small chart there was a fluctuation. And I want you to see something that happens here. Right at this fib, I get one of those tails, and 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 I get all those tails, and I get another tail, and I get more retracements, and I get a big bounce, and I get more tails. Every one of these tails that you're looking at, guys, is a fight that's happening right at that decision-making point. And that's one of the reasons that rule number 2 creates such an advantage for you guys. Once you let it get beyond that fight point, things tend to smooth out. So I'm going to ask real quick, are you guys good? If price reaches, the triggers remain below resistance, above support, it's all right to sit on your hands and do nothing. Let's wait and see what the reaction is instead of predicting. And then once the area is broken, let's look for it. Let's go for it. Let's look for opportunities until we reach the next area. Claro, C. And then that opens the door for the next trade. I wonder, pointer options. There we go. That opens the door for your next trade. Your first medium probability trade, that trade where most of your indicators line up but a small issue exists. And guys, this is trading the potential of areas to break, the potential. And it's what we call a 50-50 look. When 50% of my triggers break through the area, my small triggers, but 50% of my triggers, my large triggers, have not. As long as I have odds favorable momentum, I have the potential to break that area. And I'm going to give you guys a plan to take this trade. And you'll find that this is most of your trades. but it needs to be managed a little more aggressively, and you're going to rely on your chart reading to do that. So it can be a termination and we do absolutely nothing. It can be a clear path and we can't wait for our rules to be met. And it can be the potential to break, which means that without that clear path, I really want to make sure that everything else is perfect, guys. So there will be times, darn it all to heck, there will be times when your path is not clear because of stacked areas. Guys, this is 90% of your day. Doing nothing. 90% of the day not in a trade. 90% of the day having to wait. Guys, the futures markets trade on average $220 billion an hour. Trillions of dollars a day. And the cool thing is, it takes $400 a day to put yourself in a six-figure income. That's it. $400 a day is a six-figure income. So you don't need to be in every move. You don't need to abandon your advantages. You don't need to risk unnecessarily. And you'll find that the difference between the most successful traders that you'll encounter in the Nexgen chat rooms and the ones that tend to struggle are the ones that are capable of doing absolutely nothing when there's nothing to do. The people that are content sitting on their hands when they don't have the advantage, those are the people that typically find success. And that's why we speak so heavily about momentum and clear path. Because once you understand these two concepts, it opens the door for all the other trades. It opens the door for finding advantages and then capitalizing and taking different entries and finding different ways to get paid. And this is a good example. Marty, don't let me down here. Once you understand momentum and you can get that clear path, you're going to find the opportunity to make money. And Marty, freaking rock star. All it is momentum and path and a way to capitalize using a smaller, faster chart. And you'll notice he gets the hell out of the market when he reaches the next area because his path is no longer clear. You knew about it. You knew where it was. You knew you had room to it. And with all that momentum, Marty said, they're going to pay me all the way. Beautiful trade. Beautiful trade. This trade's called the chili dog, and I don't officially teach it, but I'm always willing to help. So once you have momentum, once the path is clear, guys, we're going to find the entry. And man, we're talking precision. When the large chart says up, when the large chart has momentum, when the large chart has a clear path, you're going to pinpoint where those tails are most likely to form, and you're going to do it by buying or selling an area inside of triggers, by anticipating the failure spot of the small crowd. And you're going to do it with such precision that you're going to use a limit order. You're going to wait for the market to come to you. And you're going to wait at an area, fib, midband, or yellow 1-to-1 on the small chart. And I want you to insist on it being inside of triggers, guys, because triggers on your large chart, on your small chart, on your range chart, on your week chart, on your stock chart, large triggers are where price typically returns. So you can define the point where these price bars are most likely to return by using the triggers. And you can define where the market is most likely to bounce, to continue with the trend, to go with the momentum, to embrace that clear path by the areas inside. So rule number 3 in one deep breath says we're going to buy or sell a pullback at an area inside of triggers. And this is exactly what it looks like. And for the brand new user, favorable large triggers is your highest probability. Favorable large triggers removes a lot of indecision, because when your large trigger and your synthetic trigger, and synthetic looks like it has steps. It's just the large trigger from the large chart. When your large trigger and your synthetic trigger are one on top of the other, overlapping, it looks like two snakes riding piggyback. Guys, you have the smallest range where the price bars are most likely to return. And then when you shoehorn some areas in there, fibs, midbands, yellow 1-to-1s, you have the smallest point where the market is most likely to continue with the trend. So all we're doing is defining our entry. And it begins with the large chart having odds favorable momentum. And it begins with the large chart. I want my arrows to stay visible. There we go. It begins with odds favorable momentum, and it begins with a clear path. And when you have that, your small chart's going to look like this, guys. It's probably going to be railing north, and that fear of missing out begins to kick in. And you're like, oh no, I'm never going to get paid. This stinks. I hate life. And then the small crowd fights. And the small crowd fights, you see it with a reversal bar. So when everything is up, I'm waiting for a down bar. And this down bar signals the beginning of the pullback. It signals the beginning of the fight. So let's define where these bars are most likely to return. It's my triggers. From the highest point to the lowest point. This defines where those price bars are most likely to return. But I want to define the bounce point because that's where the magic happens. So I'm going to create a window of opportunity, guys, from the highest point of support, a mid band inside of favorable large triggers, to the lowest point of support, yellow 1-to-1s, inside of favorable large triggers. Guys, this is your best case scenario. And because of the momentum and because of the clear path on the large chart, you're going to activate a limit order a tick or two above that highest point of support. This becomes your entry for the highest probability trend trade. This is you pinpointing where the small crowd is most likely to fail, guys. And it's learning this entry that gives you the least amount of risk, because the lesson of pinpointing where the market is most likely to continue defines where the market should not go. And it should not go below the bottom of these triggers, that return point. And it shouldn't go below the areas inside if this is going to be one of those 70 to 80% winners. So we're going to use the idea of where the market shouldn't go to not try and take an entry at this fib. And even more so, for management, this is where the market shouldn't go. So this is where my initial stop is going to be placed. And if the small crowd can push through all of that business, they can have my money. I don't want to be in that trade anymore. So in a downtrend, the background is red, the momentum is strong, the path is clear. I'm wishing I was in a trade, but I'm waiting for a reversal bar. And this reversal bar says to me, Mark, the fight is on. Let's define where these bars are most likely to return. And they're most likely to return to the triggers, from the lowest line of the triggers to the highest line of the triggers. And guys, if your triggers are not favorable, if there's space between them, if they're spread out, this box gets bigger and bigger, and your risk gets bigger and bigger. So once I define the triggers, I have to define the area inside. Well, it's just one mid-band. That's it. How easy is that? The mid-band is where the market is most likely to continue with the trend. The mid-band is where that small crowd is most likely to fail. So I activate a limit order a couple ticks below that mid-band, and I say, come get me, small crowd. I will sell this market while you're on the way up, because behind me I have the strength of momentum and I have that clear path. Any line beyond the triggers is where the market shouldn't go. This isn't an entry. This is where your initial stop placement is going to go, guys. Your initial stop is going to be 4 to 5 ticks above these triggers, and you're going to taunt the small crowd. Come and get me. Come and get me. That's the only way I'm giving up my money. I won't give you a stop inside of triggers. I won't give you a stop below an area inside of triggers. You have to get to the wrong side of everything to have my money. And if you study this trade, you really will approach it with that level of arrogance. There are 3 typical entries. Thanks, Marty. There are 3 typical entries that we see in new users. This is the Mark Novak story. This is my autobiography. The first one is when the large chart rules are met and I just don't want to wait, and I jump in arbitrarily. And guys, there are times, there's a trade where you seem to just jump in, and it's not when you've broken beyond everything, you're in the middle of nowhere. This entry shortens the distance to my target dramatically. This entry, if I'm using the correct stop where the market shouldn't go, gives me hundreds of dollars of risk, guys. I want you to learn how to avoid this entry. If you succumb, and we all do at some point, that reversal bar that starts the process of looking for an entry, that's your exit. If you just jump in hoping, that's your loss of momentum. It's okay to exit with that. Because when the rules are met on the large chart, very often this failed trade turns into the trend trade. The second entry, we saw this one yesterday, is when it doesn't quite get your order and you see a little spike and your gut says, oh my gosh, they're going without me. I better jump in. And it's like Murphy's Law. You have an entry at the highest point of that bar, and then it heads right back down. And guys, if you do this, once again, you have shortened your distance to profits, and you have increased your risk. Which is why we spend an entire hour defining entries, because great entries create manageable trades. Buying the pullback at the area inside of favorable large triggers gives me the shortest distance to my stop, and it gives me the highest distance to my target, guys. So these are all very common, and you shouldn't feel bad about taking either of these first two, because you probably will. You'll probably even take an entry somewhere here because you just don't trust it yet. That's okay. But the cool thing is when price pulls back and hits that area, it's more likely to go up than down. If it goes up, if I get a reversal bar up, this is a confirmation bar. And guys, it can only be a confirmation bar if the rules are true, because it's confirming that the momentum is pushing you to the upside. And it's confirming that that clear path didn't stop the market. And it's confirming that that area created the bounce and sent you off to the promised land. And once you get this one, you're going to change your idea of where the market should not go. Your first stop movement is going to put you like 2 ticks below it. And man, it's awesome, because when you start pulling these sniper entries, $40 or $50 risk on a contract in the futures markets is unheard of. And that's the precision that Nexgen gives you here. But you've got to learn the looks so they become easy. We don't trade tails. We know where the tail is most likely to form because of rule number 3. But if I scroll back historically and I circle a tail when the rules are met, when I have momentum, when my path is clear, and I circle it, and then I turn my attention to a small chart and it looks like this, a pullback to an area inside of favorable large triggers, guys, that's my look. That's the look that I'm committing to memory. That's the one that you have to go study. And one of the things that I tell you guys in this room every day is that the path to becoming a trader, like really quick, doesn't necessarily revolve around taking trades. It is, I think, more important to recognize looks and to take pictures as opposed to trades. So I'm going to circle that tail with the potential to break, with everything saying up. And I'm going to scroll back on my small chart, and I just want to see what it looks like. That's a pretty ugly look, isn't it? That doesn't look anything like my trend trade entry. So guess what? That's not my trend trade entry. That's not my look. So I'll scroll back again. And I think crude had some troubles yesterday, didn't they? All right, so let's do this. Here it had momentum, but it hit a fib. It still pulled back to support and retested the fib, but that was no trade. But guys, that's your pattern. That's what it looks like. So let's go to, what is this? This is the S&P. They are killing it to the downside, and they were killing it to the upside. FOMC day, not always the easiest day. Just for grins, let's suspend disbelief for a second. Let's see what that tail, momentum, and potential to break look like. Scroll back on the small chart, and here's a lesson that I want to give you. Large chart says look for a trade. Guys, I want to go through that entry, the whys on why we look for entries the way we do real quick. And I'm just going to talk through it. When the reversal bar prints, I have to look from the highest point of my triggers to the lowest point of my triggers. And guys, that box is huge. That box is huge. And then I have to refine it a little bit. There's some areas, and there's some areas right on top, and then there's some areas even lower below. And you can see that there's nothing in the large triggers. So honestly, the large triggers are out of the equation. This is where I'm anticipating a box, a bounce. So 23 all the way down to 21. So I've got, what is that? 23, 21, 2 points, and this is S&P. That's about $100 worth of risk or $100 worth of range. But I know that my stop has to go all the way down here, 5 ticks below, which means I've got $150 over $300 worth of risk on this trade because my entry isn't perfect, because my triggers are here, my triggers are there. And guys, when your triggers are split like this and that range gets big, insisting on that confirmation bar, what it does for you is it gives you a place to put your stop. It gives you a place to move that initial stop, to put it 2 ticks below, to reduce your risk. So understanding that favorable large triggers is ideal is outstanding. Understanding that once they split, it's okay to wait for confirmation. To be able to say my entry isn't perfect, let me insist on confirmation. Guys, it keeps you out of a lot of trouble. Because with this look, if you never get a reversal bar, you never get a trade. You never take that loser as it craters down. So the idea that if my entry isn't perfect, I'm okay waiting for a reversal bar. Look at this. This is FOMC day, guys. Termination to termination to termination to termination to termination to termination. Rule number 2 is defining an area where the buyers and sellers are fighting. Rule number 2 has defined a range that I want to break out of before I look for a trade. Rule number 2 did this for me. I didn't have to do any crazy patterns or anything, right? It will, Marty. It hasn't. Big difference in language. It will break eventually. No, it hasn't. It hasn't broken. Smalls and large haven't gotten above it. Smalls and large haven't gotten below it. You are literally stuck in a glass case of emotion. And until those triggers break, you're hoping. That's it. Does that make sense? Price broke, triggers didn't. Big difference. Triggers define. It's important. Guys, I focus on language a lot. I really do. I think language is very important. So let's talk about what it takes to get good at this. Let's talk about, sorry Ron, I have to make that mouse smaller. It's freaking huge. And it's given me anxiety. I'll cut it in half. I'll meet you in the middle. Still big, but not huge. The easiest way to get to where you want to be, ladies and gentlemen, isn't necessarily taking trades. It's taking pictures. And taking pictures isn't as exciting. The driving range isn't as exciting as being on the course. The batting cages isn't nearly as cool as being in front of a crowd. But this is the deal. Learning these patterns, guys, learning these patterns, recognizing them quickly, and then turning them into trades. That's what we do. And the more clearly you see them, the faster your reads become, the faster your reaction time is. So to get to where you want to be, guys, the easiest way to get there is take 25 pictures each. Take your strong triggers and your weak triggers. Take your clear path and your termination. Take pictures of those entries, guys, and drop them into the spreadsheet. But it's not just dropping them into the spreadsheet, guys. You want to annotate. You want to talk about the whys. This is from weak triggers. Why is it weak triggers? Well, this actually has both. This is even better. When the small and large are the same color as each other and the background of the space between says strong triggers, momentum, rule 1. There it is, both directions. And then there's weakness. These are weak. No momentum. Rule number 1 not met. Twice. And twice there was a reversal. And if you go through this and you do this and you annotate, guys, the idea and the process of taking the picture, of annotating the chart, getting it into the spreadsheet, it creates a connection between what you see and what it means to you, and it develops trust in the idea of momentum, and it develops trust in the idea that weakness isn't it, that terminations aren't good. And eventually you'll piece these together to create a trade. So as you grow with the software and you're like, man, I'm going to do this, I want to do this, but I'm brand new, I'm giving you the high probability trend trade checklist as well, guys. And this is a picture of what it means to have the checklist things met. Is the market coming from a strong top or bottom? Well, that's not mandatory, but it is the precursor for the highest probability trend trade. So let's define it. It's a no triggers through termination that reverses the market. That sets me up for the best of the best. There's the picture of momentum, and momentum is consistent on every chart, as is weakness. Know the difference between the two. No triggers through, not broken, no clear path. Guys, this is exactly what it looks like when it's time to not take a trade. When the smalls break through but the large haven't, that's only the potential to break. It's not a clear path. And look left. That one never broke. It had the potential, but it never did. Only when the small and the large break is my path clear. Anything else before this look is hope, is potential. And then finally, defining your areas. There's the pictures for longs and shorts, from reversal bar to identifying triggers to finding your areas to where your order goes. And then the next page is the high probability trend trade checklist. Guys, print this out, get it to your desktop. When you scroll back and circle those tails and studies, use this, go through it. Take the pressure of a live market off as you learn this. And I've never had anybody in the history of this do worse than 70% if they truthfully marked yes. So you guys that are new, looking for all the trades, you guys that are old looking for all the trades, if this wins 70% of the time, get really good at this before you start adding the rest. And this gives you an opportunity to be in a position to be profitable while you still learn to read your indicators. And that's what this is, guys. This is your KISS plan. I promised you everything that you need. The KISS plan is a stepping stone in your learning journey, and the KISS plan is not your first trade. It's your foundation trade. It's your learning to read your charts trade. This is the one that opens the doors for you to see the rest of the trades, guys. And it's designed to optimize your chances of success with the high probability trend trade as a new user as you go on this journey. And I'm going to go ahead and brag for a second. I've had brand new users beat the prop firms using the KISS plan within their first 30 days. They learned it in a week or two, and then they executed it flawlessly and found success. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators, guys. Once you can read charts, you're going to create your plan. You think the triggers finally broke. The price bars did, yeah, the triggers finally broke above, and look, it went to the next area. Nice job. Great job. And how many people went short believing that it had to break the area? Probably as many went long. And then once it did, Marty, great patience, you made your money. Awesome. So the KISS plan is a rock solid plan to teach you to read your indicators, to give you the ability to make money as you learn to do that, to give you the opportunity to pinpoint great entries, because great entries create manageable trades, guys. So your simple plan for consistency. The simple plan for consistency is don't fight the large chart. Don't fight the momentum on the large chart. Don't trade into the areas on the large chart. Let the large chart lead the way. Go with the flow. And then you're going to define your entry for the high probability trend trade. And it's yours. It's not mine. It's not Nexgen's. It doesn't belong to anybody but you. So you're responsible whether your rules are met. The only thing you will ever control is whether or not you're trading with the rules met. Everything else is up to the market. And once you get in at the point where the market is most likely to continue, management begins, guys. Actually, that's not true. Management begins by insisting on momentum, by assuring there's no termination conditions, by giving yourself the statistical advantage. But the actual physical management begins when you get in at the area inside a favorable large trigger. So the KISS plan is dependent on your ability to pinpoint an entry. Guys, take a couple weeks to get good at it. Ask a million questions. Because once you understand where the market is most likely to continue, you understand where the market shouldn't go. And your initial stop is 5 ticks below those trigger lines where the market shouldn't go. And then there's nothing to do. You may get stopped out. Anything that wins 70 to 80% of the time, they're mathematically obligated to lose 20 to 30% of the time. But more often than not, you're going to get a reversal bar. And that reversal bar lets you know everything's going right. So you're going to reduce your risk 2 ticks below it in a long trade, 2 ticks above in a short trade. And guys, this KISS plan is designed to teach you to understand where stops go so that you don't let your emotions control that. And this KISS plan is designed to get you paid, and to get you paid quickly through advantages. because that's the goal of trading, guys. So right here, you've got very little risk, and you're either going to get stopped out or it's going to go to your first target. We're trading a 2-lot. New users simulator, we're trading a 2-lot. Your first target is $100 away from that great entry. $100. That's it. Nobody in this room steps over a $100 bill on the sidewalk. Don't pretend for a minute that getting paid at $100 is a failure in your trading, guys. $100 creates confidence. $100 gets the sweat off your palms and the butterflies out of your stomach. And once you hit that $100, you're going to go to break even. You're going to take every bit of risk off of this trade. So you've been paid and you have nothing to lose. Is break even the best stop? Of course not. You'll create a plan based on your personal goals from your experience reading the indicators. But this break-even stop, that money in the bank, gives you the courage to remember that the only reason you're in this trade, the only reason you went long, is because of momentum and path. And you had room to your target, guys. So you're going to hold that trade. And it's either going to stop you out break-even, or it's going to hit your second target. And guys, once again, the KISS plan is designed to get you in and out, to get you paid quickly, to build confidence, to make you believe in this entry so much that you never miss it. And that's a $300 trade, guys. From entry to exit, that's a $300 trade. That's a trade that has every advantage. That's a trade that's very pragmatic, very mechanical, very methodical. And guys, if that's the best you do every day, you've put yourself in the position for a $75,000 year from one high probability trend trade that goes the distance. Throw in a break even. Talked about this earlier. You're in 6 figures. I'm going to tell you with the absolute utmost confidence right now, you'll see the potential. If you go through this process, if you study the looks, if you practice the entries, I don't think anybody in this room won't see the potential for $800 to $1,000 effortlessly. But you don't have to. You can learn how to make $300 a day and then double your contracts and turn it into 6. Take the same trade with the same conservative plan and just add contracts, guys. You'll figure out your money management. You will. But there's 2 things you have to know before you ever put yourself in the position to trade this market live, any market live. You have to know why you will enter and why you will exit. Now, I've just given you a plan for both of those. Because entries are nothing more than patterns proven to win more than they lose. That's all it is. It's a pattern. It repeats itself every day. Exits happen either when profits are reached or the advantage is gone, whichever comes first. And rules eliminate the need to know what's next, guys. If you know that your pattern wins 8 out of 10 times, you should take it 10 times and expect to lose 2. But you should always take it when the rules are met. Otherwise, you kind of skew the results, guys. So if I'm in a trend trade, I have a set of rules to take it. And initially, I have the KISS plan to exit. But that'll grow as I grow. And if I take a 50-50 trade, I have a different set of rules to take it and different reasons to exit. And if I'm in a momentum trade, I have different rules to take it and different rules to exit, and same with the HVA. So I always encourage brand new users. This is your plan. Give me 20 days of following the KISS plan. Give me 20 days of becoming an expert at momentum. Give me 20 days of pinpointing where the market is most likely to continue and identifying termination conditions. And it opens the door for everything else that you're going to want to do with the software. So I promised you everything that you would need, guys, and I just dropped a zip file in the room called Everything That You Need. How clever is that? We learned the rules. We talked about them. We broke them down. You know how to study them. You know where to study them. You know where to put your pictures so you can go back and study them. You have the ability to simulate, and you have live feedback 15 hours a week, guys. 15 hours a week. You can get every question that your heart desires answered. We simplified. We kept it basic. We're going to keep you focused. You will grow outside of this, but in the beginning, keep it super simple, guys. The only thing that I didn't give you was the experience to be good at this, to be fast at this, to feel confident in this. That's what you have to do. That's where the spreadsheet works, guys. And then this is for you new users. Don't try to do what the experienced users are doing. They're ahead of you. They've got more experience reading indicators. Focus on your plan. Do your thing. And don't put the pressure on yourself to be great in the first week, in the first day. Learn momentum. And once you have momentum down, it'll probably take you an hour tops. Start working on those termination conditions. Go back. See how many times those lines stop the market. And then once you have those two, let's work together on entries. Let's make sure that you can pinpoint, guys. And I discovered this a month ago or something. This is my new favorite word, guys, Kaizen. It's a Japanese philosophy of continuous improvement, because that's what we're doing. We are building a foundation, and we're going to get a little bit better every day. 1% better every day. I'm going to take my understanding of trend. And with that understanding of trend, I'm going to establish an understanding of momentum. And once I have momentum, I'm going to be able to pick out a clear path. And once I have that, I'm going to start looking for entries, because you got to get in to make money, but getting in with advantages is where it's at. So guys, go through that zip file. It's got Chart Reading 101, so you know how to study. It's got the High Probability Trend Trade Checklist, so you know what it looks like as you study. It's got the KISS plan, so you have a plan to follow, entries and exits. Reminds you that you don't have to get paid $1 million to be a millionaire, and what it's going to take to get in and out. Every one of those is in there for you, along with the PowerPoint that I used to teach, and they're all in there in both Microsoft and PDF, so there's no excuses. You guys are my proverbial horses. I have led you to water. Whether or not you drink is entirely up to you. So, with that said, before I take my first break, are there any questions, guys? Is there anything that you'd like to discuss real quick regarding momentum, path, or entry? Because when I come back, we're going to start looking at charts, and every chart. That's what we're going to talk about. I don't care what kind of trade you guys take. We're going to talk about momentum, path, and entry. And I'm going to hurt your feelings sometimes, because you're going to tell me you had momentum and I'm going to tell you you didn't. We're going to see your chart read, and if you need a little correction, I'll give it. And you're going to think you had a clear path, and I'm going to tell you that it was only 50-50, and you're going to get in your feels, work through that. My job is to help you get better, and guys, that job is more important to me than your feelings, but I will be very, very honest, and every problem I identify, I will give you a solution. So, I'm going to go take a break. You can watch the market. There we go. There's that 50-50 look. And it still hasn't broken. Still hasn't broken. I love it. Termination, right off of the termination. Crude oil inventories are coming up. And now the S&P is doing their best to giddy up to the upside. So I'll leave you guys with the S&P. And when I come back, we're going to start clicking on charts, guys. Go stretch your legs. All right, y'all, part 2 of class. Here we go. I'm going to scroll up to the top and we're going to start seeing what you guys have been doing. Dun, 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 dun. I'll tell you what, I took this picture this morning. I wanted to share this with you. Guys, I love taking pictures when my rules aren't met. And I had termination conditions. And these termination conditions, my rules say don't trade into lines. Just don't do it. And I was like, oh man, but it's right there and it's inside of triggers and it's good and look at the support and I have to take this trade. And I was like, no, it doesn't fit my rules. And then this right here. Has anyone said my rules aren't met and then it looks like it's going to go anyway and you jump in and you're like, oh my gosh, I was wrong. Let me break my rules. And right here is where your guts deceive you guys, and this thing dropped. And I love taking these pictures. I love taking pictures when my rules aren't met because it makes me feel better about following my rules. This is what we call an avoidable loser. So I wanted to share that one. I wish it was break rules never, Jen, but I'm human. I still break rules, guys. Still break rules. I don't want to, but I do. All right, so we're going back. We saw this one. This is Irish MKC. He's taking a trade that's called the Chili Dog, guys, and this is a product of one of the amazing Nexgen clients study. And it goes on the premise that decisions are made at fibs, guys, and he lets his price get completely south of those fibs because fibs are where fights happen. And while his triggers aren't completely through, the price bars are. And he's like, man, this is a great rule. Thanks, Ron C, for this. And he does the same thing here. Let me get below anything that's problematic. Let me have momentum on both charts. And I can take these little base hits. I can take these little $100, $110 trades. And I can typically get in and get out before the momentum's gone. And guys, this is an awesome way of taking that foundation and translating it into the next trade. And that's perfect execution. Nicely done. Let's see who's next. There's not a lot of pictures today. And then the master himself. When everything is down, when price clears trouble. And notice that he gets in on the other side of the blue line, not into the blue line. Great trade, Ron. Really nicely done. All right, Lenny. Lenny says, check it out, Mark. I've got odds favorable momentum. And it's a 50-50. And Lenny, great recognition here. Smalls are above with odds favorable momentum, but the large haven't broke. And guys, this is huge. Lenny says, I'm not going to sacrifice momentum because I don't have a clear path. So I'm just going to make up what you were thinking, Lenny. Waited for pullback to the midband, entered long, and took it to the prior peak price. Almost. Almost. But guys, look at that entry. Right at the area, right inside of triggers. Once he got the reversal bar, you were in at 39, your stop was 34. 5 ticks on the potential to break. And because it's just the potential, he says, let me get paid. 2 contracts at 52 is $237.50. And it doesn't have a timestamp, but I would guess that was seconds to that winner. Lenny, great trade, dude. Great trade. And then Miss Jen. Miss Jen says, check it out. Waited for the backup price to close, which would have been over here, right? Didn't quite make it and retraced. Honestly, here, just saying. And then you entered. And you entered, and you entered. And then that was your trend trade. And then really late, so you took a tiny little profit. Well, what it is, and let's not call it a bad trade, Jen. Let's say Your large chart said down. Your large chart said down with aggression. Your large chart said it was more likely to continue down. You just missed your entry. And it doesn't change the expectation, right? But it doesn't change the expectation that it could go lower, that momentum could push. And this is the part that I really like about it, Jen, is even though you were in late, you still knew where trouble was. And even though it was $60, you got paid at trouble. And I love that. And I impart the exact same idea. If I can identify trouble, I like to get paid at it. And I think you did great. And at this point, you probably took risk off and then it came down. And then when momentum goes away, and momentum's appearing to go away, you don't sit and hope. You take an exit and you get paid. So I hate the entry. I love this one. I hate the entry. But I love all the reasons that went into it. And I love that you took it. And I love that you managed it. And the fact that you know it was late means that you're going to be more focused on the better entry next time, right? That's all it is. This is just you getting smarter. So great job. Sorry, I'm not going to beat you up on that one. I want to, but I'm not gonna. Lenny, man, I gave you all the praise in the world and you left the room. I love this. No, you're good. Lenny, I love everything about this trade. You have all the momentum. And this is the one that I think is so great. And guys, this is where understanding what you're getting into creates the need for management or the need to just let it run. And Lenny says, man, this is 50-50. This isn't a clear path. This isn't the best of the best. This is problematic. It doesn't have to break. And I want you to see, and Lenny, this is what I was saying. Lenny's, look at the momentum, small separated from the large. It's beautiful. There's no divergence, which we know is a loss of momentum. So what Lenny did is he said, I don't have a clear path. I'll be good gosh golly darned if I sacrifice momentum. And Lenny, I know that you said good gosh golly darned. And then look at his entry, like a sniper. Not worried about the fib, not anticipating the one-to-one, saying, let me get at the area inside of the triggers. And then it goes up, and risk is virtually nothing. And Lenny, you almost took it to the peak price. You missed it by 50 bucks. But you got paid. It was a medium probability trade, and you got paid. And guys, I'm going to tell you right now, even if this rockets to 70, don't you dare beat yourself up for making money. There's too many opportunities in the market to worry about not making $500-600 on every trade. There's too many opportunities in the market to ever beat yourself up about taking 60 or 70 bucks because there was something in the way. So props to both of you on remembering the whole reason we do this. It's to get paid. Lenny, it kills me to have to praise you twice like that, but you know what? Good job. And then Marty, again, odds favorable, back of the bar clears, room to trouble, beautiful trade, easy money. I don't know who taught you this, but good stuff. Marty says, this is the perfect loser. Marty, no. Why not? Odds favorable, price cleared, tried multiple entries, got bounced each time. LOL, damn it. So you took your first entry when you lost momentum, you exited. It said perfect loser. I didn't miss the question. No, it's not the perfect loser. Why? Because you didn't have room to trouble. This one was the perfect loser, just didn't work. This one, you broke your rule and you traded into divergence instead of from divergence to the fib. See the difference? Because this one lost, you got pissed off and you broke your rule. You didn't have room to make money there. Not per your plan. I know your plan. I gave it to you. But because this one wins, you're more inclined to break that rule next time. And I think we understand that that's a bad thing to do, especially on the NASDAQ. So consistency. This one, yes, perfect loser. Everything was right. You were in at 27. It came down to 22. That was $100. So you were, what, a tick away? Probably had your stops down here thinking you were going to take a bigger run on a momentum trade. Yep. You changed your plan mid-stride, hoping to make money instead of following the process. Dude, you were a tick away from your exit. And you gave it all back. Every bit of it. You lost money on it. No, you were 27. It's hard to read. It's all right to protect yourself. When you get that close, don't give it back. But yeah, every rule was met. And they are going to lose sometimes. And guys, I'm going to tell you right now, I'm going to look at all the trades on your chart. Pete says, this was not a good trade but worked. I love that you recognize it, right? Although I had a strong bottom, Triggs had rolled up and separated. It was directly into a termination condition. And you got right back out at the termination condition. So let's talk about being a chart reader, guys, and how it pays dividends. The only reason you took it was 5 ticks of risk. So let's talk about all the good stuff, Pete, because I think this is beautiful execution. This is one of the things that I like to do. And guys, this is the bar fight scenario. And good on you if you've never been in a bar fight. A strong bottom is a huge advantage. Trading with the trend is a huge advantage. Having that level of momentum is a huge advantage. Having an area inside of the triggers with virtually no risk is a huge advantage. No divergence in strong triggers is a huge advantage. Guys, this is 6 things that scream this market is likely to go up. And Pete said, I got one thing that says that it might not. And what Pete knows is that with no loss of momentum, with momentum on everything, with a strong bottom, with this level of giddy up to the upside, very often there's a retest. And he just rocked the hell out of that retest. Pete, does it break a rule? Of course. Does it have so much going for it that it's worth $50 a risk, $200 to see if it retests? I don't disagree with your trade at all, Pete. And very often for me, if I'm ever looking to do something a little outside of the norm, not having divergence and strong triggers on the small chart is a pretty good tiebreaker for me. So just, here we go. Shame, 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 shame. Just kidding. So many reasons. And the one thing, and guys, this is what separates Pete from the brand new user, is Pete knows that it wouldn't be unlikely at all to get stopped out. Is that fair, Pete? You know, like if you lost this trade, you wouldn't be the least bit surprised. But it's acceptable risk based on advantages. And I think that's where we're all headed as day traders. That's where you new guys are headed. To be able to read your indicators fast enough to weigh out the pros and cons and decide whether or not it's worth your money to take that trade. That's kind of what trading is. So, and Pete says he'll take a 5-tick loser every day because Pete knows that losing trades isn't a negative, that losing trades is a part of trading. All right, Rob. Waiting for the trigs to break before going long. But you didn't. That fib update came in after, so you weren't trading into that fib. It wasn't there yet. Just jumped in, 55.25, didn't wait for a pullback to an area. And Rob, you're missing your synthetics, brother. You don't have your synthetic triggers on here. And I think that what you would have found is they probably didn't even get to the synthetic triggers. Momentum on this chart, not on this chart, no areas for entry, and you held it and it worked. So I like that it worked. I can't find any rules met on the small chart because I know what the momentum trade looks like, and you're on the wrong side of everything, and you're not taking a trend trade entry, so I'm not sure why you got in, but you let the large chart push, and I love that you took an exit and didn't give it back. So hard to figure out the whys on that one. But good job. Sorry about your internet. I thought you got Starlink. All right, Z-Robot, let me see. What did you write? You wrote so close many times, jump in. How would you react? Doesn't matter how I would react. I tend to not react. When so close but no fill on a limit order. So this is the same picture from 5 days ago, right? My answer is the same, Z-Robot. Right on, Rob. I like it when you guys do this to me. Let me show Mark the same picture from last week and see if he gives me a different answer. Z-Robot, I just don't forget stuff. It hit your entry, it didn't fill, it's not your trade. That's my philosophy. Nice try, sneaky, sneaky. That's my philosophy. If it doesn't fill, I don't chase. I have a plan, Z-Robot, and everybody in this room. Let me be 100% transparent. I have a plan. My plan has been proven to win more than it loses. In Z-Robot, there's so much more going on here, right? You had a third divergence in the same price range. That's a termination condition, right? You did have great momentum. That's awesome. I love it. I don't worry about it. I don't know what these little yellow dots are. They're cute. I'm not sure what they are. But my entry is my entry. And my plan is solid. And my plan wins more than it loses. And I have to believe that if it doesn't give me my entry, it just wasn't my money. Just wasn't my money. So no, I don't jump in. I just don't do it. I don't have anything in my plan that says if you don't get your entry, just jump the hell in. Yeah. But it stinks, doesn't it, when it goes down and you feel like you missed out and you want to change your plan because of that one time. Yeah. So, but everything's appropriate. Everything's right. But let me point something else out. Is you're trading gold. And gold is a colossal pain in the ass. I don't care for gold. But let's do this. I didn't get my entry, but I got a reversal bar. Maybe you say if it doesn't fill and I get a reversal bar, I'll enter based on the expectation. But all you do is you end up with a stop right at an area inside of favorable large triggers. And how many times does it like give you that head fake and then come back? I can tell you that it happens enough that even on, check this out. Oh, I know. Let me show you this one real quick. This is the one that I used to teach the class every day, Z-Robot. And there was a reversal bar and almost an entry. And if you just would have jumped in, it probably stopped you out on the way back to the perfect entry. And I can't tell you how many times that's happened to me. Yeah. So yeah, if you're not jumping in, man, good on you. And in the middle of the night on gold, there probably just wasn't the volume to have someone on the other side of your trade. How do we like this one? Does that look like a pattern we talk about every now and then? Odds favorable, potential to break, right to the mid-band, right inside of triggers, and off it goes. I like that. But Z-Robot posts that picture every day for a month. If that's what it takes until you believe it, right? Or trust it, it doesn't bother me a bit. I just think it's funny that I remember things. You bet, man. You missed it by a tick. 50-50, 2 divergences, and you chose not to take it. I don't disagree with that, Morgan. Was that Morgan? No. Yeah? No. Hold on. Who was that? Jen, was that you? Oh my gosh, I'm so confused. Hold on. I lost my place. Okay, that was Jen. I love it. 2 divergences, you're not taking it. I love it. Did it go up without you? Did it make you regret having rules? Did it make you feel like it reversed? So reversed up or down? The market went down? You did good. Okay, I love that. And guys, I like doing this. Anytime I don't take a trade because my rules aren't met, I like to go back and look and see what it did. Because usually I feel pretty good about not breaking my rules. Sometimes I feel like I got left out. Steve Diego, everything is just screaming to the downside, and you choose not to trade into a fib, but rather you let it clear, and it's a pretty easy winner. Nicely done. Steve, did you notice that your synthetic fibs aren't showing up? 89. I'm not sure that you're pulling over to your large chart with your fibs. Odds favorable, back of the bar clears, room to the target. Nice job. Great job. And Steve, did just letting that one little thing of clearing trouble, has that changed results for you? And then getting paid? It's funny, isn't it? It can be the smallest little thing. It can be the most simple fix, guys. And if you don't post in the room, I don't know how to help. And I think that was a good one. So great trading, Steve. All right, Morgan, this one's you. Term with no triggers through, but not a strong top, since they haven't yet rolled. Read last. I have often noticed that these white bar trades in between 2 fibs. Is this a no-go trade if there are 2 fibs at a turn around? This trade may have worked for me now, but I am not sure if this is what the trade calls for. It's a no triggers through termination. So Morgan, that's step 1, brother. Right? Fast triggers rolled. That's step 2. Took the trade because my stop goes a tick above the bar. It was 20 bucks risk for $100 profit. Why did you exit? Oh, you exited the other fib. So you really didn't have any place to go, huh? I see what you're saying. Your smalls are above this one. You just didn't have any place to go. And remember that whole thing on fighting strong triggers? So, I mean, nice job. And you got in at the HVA area on the white bar. Is that right? You didn't wait for it to print? Dig it. I like it, Morgan. I think you did a good job. And I think understanding what you're up against allowed you to manage. But for me personally, the momentum is super strong from a strong bottom. And at the time of entry, dude, you got like odds favorable momentum. Smalls above, everything up. That's a lot of fight. This one's probably going to lose more than it wins. Because everything is up, right? That's pretty aggressive counter trend trade. Done well, if I may. Good job. All right, 50-50 momentum. Let me figure out which one you're talking about. Because that one's into a termination. That one's not a 50-50 because of weak triggers. Wayne, are we talking about the first trade? So, no triggers through, definitely a termination condition. But you do have momentum. 3 divergences in the same price range, another termination condition. Mid-band trending up on a tiny little small chart. But you take it. I think you pulled one off there, Wayne. Because you traded into multiple termination conditions. But the fact that you let the smalls roll and go the other direction, I think that's what gave you the fighting chance here. Does that make sense? I think your patience is outstanding. And I think that if I was going to take a shot at this trade, that's my look. So, rock star, dude. You knew what you were getting into, and you waited. Marty, I'll get to your question, man. We're going in order, I promise. You don't have to change colors on me. And then getting paid. And then here we've got weak triggers at a fib. And you're on the wrong side and saying, oh, that might not be the best. Let me get in. Let me get in. Let me make some money. Let me not hold and hope. So, trading into a lot of trouble, Wayne. There's no doubt about it. But you really do it well, to be honest with you. And then it's just down, and you try to go, you do come down with it, and then you're out of trouble, and then you go the other way because of the gap theory, and when it doesn't work, you're out of trouble, and then you try to trade into all the termination conditions, and it doesn't work. So you go the other way. Oh, I'm exhausted just looking at it, Wayne. I like the first short. You let it hold, let it roll, right? I guess good management on that one. I don't know that that's the right trade. And then definitely trading back into support is financial suicide. And then there's those three divergences again, and everything says up, so you just jump in and you get out there. That's a lot of work. That's a lot of work. I love you said you chickened out and closed. You hit Fibonacci support. What a great exit. And Wayne's, you're just trying to catch every dollar, and that's cool. All right, so we had a question about synthetic triggers. Let's get it. Stumbled onto this, look, swapping charts. Anything can happen. How can you say anything can happen but rules met? Don't your rules say odds favorable momentum? I just want to make sure. Guys, I'll get you on your annotation. I don't have momentum, but I'm going to take a momentum trade. It's anything can happen. This is momentum. This is weakness. This is weakness. Your smalls are, well, they're not quite inside. That's probably what saved you. And it worked. So synthetic triggers, you want me to talk about them. They're just the large triggers here. That's all they are. So when I'm defining momentum over here, I'm using my large triggers and the small triggers the same way I use them on the large chart. The synthetic triggers are over here for entries on trend trades. Does that make sense? So the one thing that my brother told me when I was learning momentum trades is I would so find that chart. Let me know whose chart. And I'll answer the question. One of the things that happens in the room, guys, is I'm looking at a chart, and if you say, let's talk about synthetic triggers, I don't know that you mean that chart. So you can steal whatever chart I was looking at, take a picture, and draw an arrow. Like, for example, if you had to do this one, regard them and show me the picture, Marty. Yeah, right now, I'm artsy-fartsy. I can think of 1,000 different ways to do it. So was it this picture? Give me a Y when I get to the picture you were talking about. This one? They have no bearing because the rules aren't met. It's a 50-50 trade. The synthetics don't mean anything. My smalls are above, my large are below. Divergence kills it. Synthetics don't mean anything here. It's just the large triggers. When you're taking a rules-based entry, there we go. That's the question I needed. Awesome. Check it out. Let me show you when they mean something. I love this stuff. Synthetic triggers mean something when I have odds favorable momentum on the large chart, when I have a clear path on the large chart, and when I'm pinpointing my entry. So what happens, Marty, is when this reversal bar happens, and this is for everybody, not just Marty, the first step in finding the entry for a trend trade, remember every trade's different, is that first red box from the top of the triggers to the bottom of the triggers, because price returns to large triggers. It returns to the large triggers on the large chart, and it also returns to large triggers on the small chart. Let me show you what I mean. It returned to the large triggers. Do you see it? Right there? Price was out here, and it snapped back to the large. Cool. So check this out on the small chart. My large triggers from the large chart are the synthetic triggers on my small chart. Do you notice how on this chart I have an area inside of those triggers? Triggers define where it's most likely to return. Here, let me do something that breaks it down for you. Let's do this. Give me a why if this makes sense. Price typically returns to large triggers. Doesn't matter what chart it is. And let's use a large chart as an example. Price breaks away and it comes back. It breaks away and it comes back. Okay. So on my small chart, let me see if I can find like an awesome example that kind of has a little separation. I'm gonna find it, dang it. Here we go. This is the perfect picture. Are you ready? You're gonna love this, guys. Every time I look for an entry, I'm looking for a short trade. My rules say wait for the reversal bar. So let's assume that this is the reversal bar that we're waiting for. At the time of the reversal bar, what's my job? I need to define where price is most likely to return first. And what is that? That's on the large chart, price may return to the large triggers. Those are my synthetic triggers. On the small chart, price may return to the large triggers. Those are the large triggers. Are you with me so far, Marty? So this defines where price is most likely to return. So how do the synthetic triggers play into this? Well, they've created my highest return spot, and I know without question that if I'm looking for a trend trade, in order to be where the market shouldn't go, that's where my stop goes. Are you with me so far? All I've done is I've said this is where price may return. That's all the triggers do for you on your entry chart. No, not will. It could. It could, right? It could. Marty, it could stop right here. But I know that the potential is that it could go up here. Or it could just rail right through. I never know, which is why the large chart rules being met is so important. So what the synthetics do for you is when you're looking for a trade, I love this question, by the way. When I'm looking for a trade and I'm going through this process of what does it mean to have the right look? So the entry on the small chart takes one bar of information from the large chart and it dissects it. It gives me these pullbacks, right? So, and I'll drop this in the room because I think this says the same thing 4 times. Large triggers are moving averages, and price typically returns to the average. So if both the large chart and small chart large triggers overlap, you've consolidated 2 separate correction points into one concise area. And this is called favorable large triggers. Does that make sense? So there's a circle on the large chart large triggers, and there's a box on the small chart large triggers. And when they're one on top of the other, I've got the smallest range where price may return. The same going this way. There's a circle on the large chart triggers, and there's a box on the small chart large triggers. And from the top to the bottom is where the market is likely to return. So by understanding that concept, what it does for you is when you see something like this, your first reaction has to be, oh shit, that range is huge. It might go off of this mid-band. It might return up here. Hell, it might bounce off of the stuff in between, somewhere in that range. Do you see this as an enormous amount of indecision? It's difficult to pinpoint. The precision isn't there. Does that make sense, everybody? So when you believe in your heart that price is most likely to return to these triggers, and you know that them overlapping creates the best chance of success, that's a trend trade thing. Marty, you could trade your chili dog trade and never have synthetics on the chart because momentum is established from the large triggers. And look at this split. And what does your small chart momentum say as you're approaching these, right? You have odds favorable to the upside. I love that question because it reminds you that your best look is when they're overlapping, but it's not your only look. It's just your best look. And this is a good example right here where you've got a mid-band inside of the large and you've got one-to-ones inside of the synthetic. And that's a huge range, right? So maybe you wait for the confirmation bar because you understand that it's not perfect. And that's the language that I like to use. My large chart is ideal. My small chart isn't perfect. Let me force a confirmation bar. Does that make sense? Does that help? Good question. Guys, I love it when you ask me questions like that. It forces me to go through to explain. Everybody hears things differently. Everybody learns things at a different pace. Everybody, like for me, one thing will click and then another thing is just gibberish to me. So if you need clarification, make sure that you're doing exactly what Irish MKC did. Make me give you clarification. NASDAQ is screaming. They sold off and look where it started. And what do we think about this? 50-50, no divergence from a strong bottom. Jen, are you going to show me that entry? And then it gave you the second chance to go up. Pretty cool, right? There's your pattern. Gary, I know you're day one. Pretty overwhelming. If it is, I don't want you to feel bad about it. If you're sitting in front of your computer going, what the actual heck is going on in this classroom? It's okay. I understand that completely. Because we take the very basics in the beginning and then we just elaborate as we grow and a little bit better every day. Terminations are pretty solid, aren't they? And yeah, that news didn't do much of anything, guys. Look at that fight. Look at that fight. The buyers are winning, but it's not an easy win. All right, that's all the pictures. So how do I get good at this stuff? I think this is the way, guys. Look at this. This says perfect crude oil long. This is from the spreadsheet. So let's just look at pictures for a second. This is from the spreadsheet. Small's above the large are wide, everything says up, and this area has the potential to break. Pull back to the area right at the top of the triggers, and it creates a winner. So this is what it looks like. Hold on. Odds favorable momentum, clear path, pull back to support right at the top of the triggers. This is what it looks like. Odds favorable, clear path, pull back to the area right at the triggers. Guys, this is what it looks like. Does that make sense? I'm not in a I'm not in a trade doing this. You guys want to see something? Odds favorable, clear path, pull back to the area inside of triggers. Loser. Loser. Anything that wins 70 to 80% of the time they're mathematically obligated to lose 20 to 30% of the time. That's why we don't form opinions. That's why I try not to break my rules. Because my rules have been proven to win more than they lose. And every time I break my rules, I throw away advantages, guys. So you can go through the spreadsheet and you've got like nearly 400 pictures where you can start drilling these looks into your brain. You've got, and guys, I've done so much work for you on this one. 56 pictures of strong triggers, 29 pictures of weak triggers, 18 pictures of a clear path, 81 pictures of termination conditions, and about 18 pictures of the perfect entry. Commit these looks to memory. I'm losing you guys. I can feel it. Andy, let's see what you got. Odds favorable momentum. Your marker's printed correctly because it's 50-50. I don't know. So Andy took what's called a momentum trade. And watch this. He had momentum. You're going to go golf? I like it. Go have a good time, Ron. Hit him straight. He had momentum. He used that momentum when price broke these 1-to-1s and snapped back to it. That's the momentum trade that Nexgen teaches. And he rode that momentum all the way to the fib. Nice, Andy. And I noticed that you and Barbie aren't hanging out today. Nicely done, dude. That's textbook momentum trade. And then there's that trend trade that was beautiful as well. And then another trend trade that was beautiful. And Andy says, man, I was making hot chocolate, but I still caught it. Great trading. Great trading. And man, it was just after news. Right on. Well, that's NASDAQ, and crude oil news doesn't typically affect the NASDAQ. But I said it the other day, and I'm going to say it again, Andy. Your trading is getting really deliberate. I think that's the best word. You're eliminating so much of the maybe lately, and you're focusing on these like 1 or 2 patterns, and you're killing it, and I love it. There might be something to the idea that you can keep it simple, that it doesn't have to be difficult. It's really the only way to get money and not give it away. And you will give it away, right? Guys, you're going to give money away. You will lose money. Guaranteed. The key is to not lose the wrong money. To not take the trades that don't make sense. To not take the trades that don't have the advantages. All right. Iron Mike. Iron Mike says, check it out, Mark. The NASDAQ was up. Everything was cranking. Life was good. So I just jumped in. Hoping it would go. And I know that if I get a reversal bar, that's a loss of momentum. So I jumped right back out. Nicely done, Iron Mike. Overlap of triggers, took profit with first contract, set second contract slight above break even, made money despite the pullback. So I like it. That's how you manage one of these trades, Mike. If you're just going to jump in, there's no reason to hold forever. I love it. I think you did this well. It's not a momentum trade. It's just jumping in, hoping. And the fact that you didn't cling to hope was beautiful. Nicely done. Wayne, everything says up. You let it get above trouble and hop in, and you know it's not a home run with weak triggers, and you hop right back out. And it looks like you and Mike took the same trade. Right on. I hope it's all good news. You got in early? Did you? You let it get above trouble. And you let it start to get above trouble. I think your entry is just about right. Oh, on the first trade, yeah. Stops aren't a number. I see what you're saying here. Guys, here comes the lesson. Thank you, Wayne, for the lesson here. I want you guys to see something. Stops are not a number. If you get in early and you put your stop, oh, right on. And you put your stop in an area inside of triggers, guys, financial suicide. Stops go where the market shouldn't. And then Wayne, awesome recovery. You're like, wait a minute, that's the right trade. And I'm just curious, and you don't have to answer, does the fact that you got stopped out on the wrong entry, did that affect your decision to jump out of that one a lot sooner than you normally would have? You set the stop and got eaten before you could move it, just super quick. Yeah, look at the timestamps, 1040, 1040. That was seconds. It's a great lesson on waiting for the right entry, though, isn't it? Okay. Because of FOMC? Points for being smart. Points for being smart. There's nothing wrong with quick profits. They add up, don't they? You guys ever watch a pitcher walk 4 people in a row? Same thing as the first guy hitting a home run. That's a great day, Wayne. And it means you don't have to sit around and try to trade the afternoon. You can go play with your hot rods. I don't even look at a computer on FOMC day. I actually set up my dog's vet appointment to correspond with FOMC. There's the divergence high. Is that what they wanted? I don't know. We'll see. NASDAQ, bad top, termination, closes the gap to the triggers, back into the termination. We'll see what happens. Wayne, this looks like your trades from earlier. Short, out, long, out, short, out, long, out. That looks just like what you did earlier. Same pattern. Exact same pattern. All right, guys, I'm going to take a break. I'll leave you with the NASDAQ because it moves more. When I come back, it's your class. Tell me what we're talking about. I'll see you in about 5 minutes. short. Last hour. That's NASDAQ. Guys, this is one of those 50-50 trades. So I'm just going to go through rules because I love me some rules. So let's do the chart read together, guys. This is a 50-50 trade. Why? Because my small triggers are through the area, but my large triggers are not. So what I'm going to do, just for grins, whoops, is I'm going to open up my KISS plan. And I'm going to make it a little bit smaller. Oops, that's too small. Here we go. And I'm going to actually take a picture of the rules. And I'm going to take this picture and I'm going to put it onto the chart. And guys, this is what I do. Every trade that I take, especially ones that lose, I go back and I replay it against my rules, and I see, are my rules good? Are my rules solid? Did I follow my plan? And I want you to see something, guys. This has odds favorable momentum. It has the potential to break. So I'm going to look for an entry, and I'm going to go to my rules. And so 50-50, one area not broken. Well, this is the NASDAQ, and it's two areas not broken. So I may already have a challenge. Is the market coming from a strong top or bottom? Well, it's not. Dang it. That's a no. Odds favorable? Yep. Yep. No divergence? Yep. Guys, there was only one thing wrong with this trade. There was only one thing wrong with this medium probability trade, and it wasn't from a strong top. And guys, anytime I have a weak top, when the market is coming from a place that is not a key termination condition, that is not a zero true, this is less likely to work. And that's why it works its way into the KISS plan. Some of you might have taken this trade. Some of you might have waited for a reversal bar and managed out. Some of you might have said, well, when this one failed and those went up, I'll go long here and see if they really just wanted to go to that next fib. Because the buyers didn't make it. It sure was. So Jen had a strong top. What time zone are you in? 9:03, 10. Oh, that's Belt. Okay, I thought that was Jen. I saw the pink M. Yeah, so you had a strong top, didn't you? There you go. And then you waited for the reversal bar and just in a little late. Didn't give you much time to manage divergence prints. You exited. I think you did great. I think you had a strong top. I think you had every rule met. And I think because it's NASDAQ, that close on the correct side was your entry, not the 5 bars later. That's the only thing I could say, Belt. This was your bar. And this bar at 27.75 gave you $100 worth of profits on a medium probability trade before going break even. It just didn't work. That's all it is. It was a 50-50 that didn't work. I wish I could give you more on that. I think your entry was a little bit late. Would you agree? So, Belt, did you hit sell now on the reversal bar? Sell market? Okay, cool. So let me show you something. If I need a reversal bar to enter this trade, I'm not saying it's a trade because it's right into a termination condition, I can right click and I can buy stop market and I can put it right on top of that reversal bar marker and it keeps me from having to time it out. So yeah, this is how I enter every trend trade that I take that needs a reversal bar. Because look how long I have. And if it doesn't become one, then I don't get in. And if it does become one, then I get in. So, and obviously that's just not even a trade. But I think if that reversal bar is your needed look to get in, those buy and sell stop markets make it easier than trying to time it out. Okay, and it slipped you that much? Welcome to the NASDAQ. Welcome to the NASDAQ. Right click, buy stop market. Well, I just screwed it up. What it does, Marty, is it forces the market to come to your entry point. And yeah, it will slip you. The NASDAQ will slip you. So let me go the other way. If a reversal bar is my entry, I can right click and go sell stop market 2. And I can just right there on the reversal bar marker. So if this comes down, if it hits that reversal bar marker, we'll see if it does it. Boom. Now I'm in the trade. Because the reversal bar marker was my entry. And guys, this isn't a real trade. I have weak triggers and a termination condition. Cool. And then because I like to give you guys goodies, here's a little reading material on it. Between what? That's an incomplete thought. The difference between what? Well, a limit order says I want the market to come up to me so I can go down. A stop order says I want the market to go down to me and then I'll get in. Does that make sense? So on a trend trade, we buy or sell a pullback. So we wait with a limit order. On a trend trade, the market has to push up and reach our area inside of favorable large triggers. So if it pushes up and hits my sell limit, then I'll be in a short position. There we go. It put me in a short position. If I needed a reversal bar off of the area inside of triggers, then I would use the sell stop. So it's already going up. I need it to go down to give me a reversal bar to put me into it. And I don't know if it will because... So there's a difference between the two. So now I'm out, right? And a reversal bar will get me in. So if it comes down and gives me a reversal bar, well, then I'm back in that short position. I force the market to go the direction of my trade. And look at that. With momentum and a clear path, it sure seems to be a pretty decent trade, doesn't it? Momentum, clear path, that's your NASDAQ entry. Should we see if it makes the fib? KISS plan's already over. You already made 300 on this one if you exited. Look at that momentum, guys. There was nothing in the way, and it was coming from that fib. And it pulled right back to the areas inside of triggers, but it's the NASDAQ, so you wait for the close on the correct side. And that was easy money, and I wish I was in my live account. Because that's it. And what's the expectation with this momentum and that path? We're looking for the next Fibonacci area. And, oh, it missed me by a tick. There we go. Oh, I wish I would have been in that trade. And guys, that's what a NASDAQ trade looks like. Don't fight the small triggers. But the close on the correct side makes for an easy trade. Jen, I hope you caught that one. Look at that. And look at the bounce coming off the fib, guys. Talk about understanding where the market is likely to go. Oh, cool. Thanks, Marlon. It's a little small. But there you go. Buy stop, buy limit, sell stop, sell limit. That's perfect. Thanks for sharing that, man. But what do you guys think? Odds favorable, clear path, pull back to the area. NASDAQ trades a little differently, so the entry is the close on the correct side of the triggers. That was so easy. And it was fast. It took 30 seconds. And that went from 320 to 2300. It's about an $800 trade total. Did that make sense to everybody? But there's your lesson on why the NASDAQ is different, guys. I don't ever fight these small triggers on the NASDAQ. Won't do it. Can't make me. I get to the other side of it. Morgan. Nice. First one, probably too soon, right? Triggers didn't roll, Morgan. You broke the rule on the first one. Let me blow this up. Triggers are weak. Term with no triggers through. Not to be confused with the strong top yet. Fast triggers didn't roll, and it whipped your ass. Fast triggers did roll, and you didn't believe it. And then you trade the HVA, and it's easy. So, too soon, too scared, perfect. Does that make sense? Why'd you exit the second one? What got you out of the second one? The second one was good. Everything rolled. There's a pullback to it. Think it was just trust? That's fair. I like that you got your head about you. And look at that sell. That's perfect, dude. That's everything you look for. And it was pretty effortless, wasn't it? Went down pretty quick from there. Nicely done, dude. These are the ones that you have to eliminate. Those are the ones that Morgan, and it'll take you a while of studying this trade. But you'll get that. You'll get that. You know that there's a simulator to practice those. I'm just saying. You do whatever you want, little buddy. But there's a simulator to practice those. There's a simulator to develop trust. There's a simulator to learn your patterns and to learn how to not take the wrong trades. Use it if you want. If you don't want, that's cool. I love Simulator. I love Simulator. I spent almost 2 months on Simulator learning this new plan that I trade. Almost 2 months without a live trade. Barbie loves her vet. Amen. I get it, Morgan. Because you're going to be a millionaire by the end of the week if you just go live a week early. Or, oh man, now I got to play wise old man thing. Or you're going to burn it all in commissions and losses until you develop the trust to take the right one. Right? That's a break even. That still cost you $7. So in at 45, out at 46. That's only a point. That's $40. It's all right. You're totally normal. At the end of it all, it was 106.40. I like it. How much would it have been without the loser? 156.40, give or take. 160. Okay, so let me just show you something. Just for grins, I had someone do this with me once. Maybe you'll appreciate it. Maybe you won't. That's okay. So $60, right? That was a $60 mistake. If I do that one mistake, Morgan, every day, just one mistake every day, I'm giving up 15 grand a year. What's the likelihood that I'm only going to do it once? And I think this is what people forget, is that it doesn't take, everything's compounded, guys. Trading isn't about one day. Trading isn't about 1 week. Trading isn't about 1 month. Trading, if you want this to be your job, trading is about what you can do over the course of the year, right? What can I do for the next 20 years? And the example that someone gave me on that, pulled up his calculator, and he goes, Mark, I want you to see something. You keep jumping out $100 before the fib because you're afraid of giving money back. And he goes, I've seen you do that like 5 times today. And he goes, I want you to just see what that looks like over the course of a year. He goes, you could be the best trader ever, but not by changing your plan, just by trusting it. This is how much money you're giving away every year. And my brother used to do that to me. Yeah, but if you hold for the areas and if you follow your plan and if you stick to your rules, once you stop giving away money arbitrarily, then things kind of come into play and they work out. Have you guys ever done this? Let's open up Word. And we'll make this kind of big. You guys ever jumped in the market and you take a $300 trade, right? And you're good and you're feeling good about it. And then after that $300 trade, you take a $200 trade. And suddenly you're up $500 and you're like, man, this is great. This is so good. This is awesome. And then you break your rules because you start feeling a little invincible and you're back down to 200. And then you break your rules again and you're at negative 100. And then you're like, oh shit, I got to get it together. And you take that good trade again and you're up to 200. And then you're up to 400. And then you're back down to 100. And you go on like this crazy wave of good then bad, then good then bad, then good then bad. Indecision, like breaking rules, following rules. And the goal, guys, is to get rid of all the losers that don't fit the plan. Because that's what lets the winners run. And I can't tell you, guys, I've done it. I've taken the wrong trades, started my day with the wrong trades, been in a $500-600 hole, and then I take $600 worth of great trades because I pull my head out of my ass. And that's where I'm at for the day. Even though I know my plan, even though I can follow my rules, even though I can take the correct trades, I'm still at a big goose egg because now I'm digging myself out of the mistakes. And guys, one of the great things about Simulator is it allows you to make all the mistakes. It allows you to begin to trust your plan. And it doesn't mean that you won't make mistakes, but the goal is to be 1% better every day, to make fewer. It's oddly triggering. Yeah, some of you are egomaniacs and you feel invincible. And even though everybody else in the history of trading has made that mistake, it's not going to happen to me. I've been doing this for 4 weeks. I know what I'm doing. Which brings me to the next picture. Let me see if I can go ahead and compound your triggering because it's fun for me. So guys, here it is. You get in. Looks like fun. It does. It looks like fun, right? The allure of mansions and Ferraris and steak dinners every night. And then you realize that you have to work at it. It's not just buying the software that creates the results, guys. And then you get to this, I don't really know what I'm doing, and I'm going to keep doing it because I keep seeing that it works. And in right around 30 days is when you feel invincible and a badass and I've got this, and you get blown out. And guys, you don't have to lose $5,000 anymore. There's prop firms, you don't have to do it. I did. This is the Mark Novak story. I lost $5,000 in 21 trades over the course of 2 hours, and I had no idea why. You don't have to trade your own money anymore, guys. There's prop firms. And then you get to the I don't know shit stage. And this is where a lot of people think about quitting. This is where a lot of people say, oh man, maybe this isn't for me. Instead of saying, hold on, let me go to another picture. Instead of saying, every day Mark lays out this plan that's been proven to get people to where they want to be. Every day Mark gives me a plan capable of winning more than it loses. He tells me to participate. He tells me to fill that spreadsheet. He tells me to ask questions. He wants me to ask him questions. Guys, the I don't know anything stage is where you really have to grab hold of this plan and embrace it. And that's when you start moving up. And Marty, you say you're at this actually makes sense, right? And there's still so much to learn, but now it makes sense. Now you believe in momentum. And now you understand how advantageous a clear path is. And you know that there's millions of dollars for you to make. You just have to figure out your way to make it. And guys, don't let this deter you. I've hit the I don't know shit stage about 100 times because I am an egomaniac. I'm an alpha male. And man, if I can't do it in a week, it can't be done. Believe me. I read a book on brain surgery. My poor friend in 4th grade. Oh. So go through it. And I like that. You either follow the rules or you don't, right? Losers happen. The challenge, Marty, is when you take the wrong trade and win, and you let that excite you the same way the proper loser shouldn't bug you. Because your brain doesn't know the difference. Your brain loves the dopamine. And it doesn't know the difference between the wrong win and the right win. It doesn't know the difference between the wrong loser and the right loser. And that's where class comes in. That's where I get to tell you. That's where I get to tell you, hey, I'm glad you won, but this may not be your long-term path to success. Because my goal is to keep you guys around forever. I don't make friends in the real world. You guys are all I got. So, whew. Look at that termination condition with weak triggers. Look what it did to the market. Isn't that amazing? Everybody knew about that spot, right? Everybody knew that could stop the market. Everybody knew that it could create a bounce. And we knew before we ever got there. And some of you traded into it anyway because you felt like it owed you because you didn't find your entry there. Now I've got momentum and the potential to break, but I have divergence. Ugh, that might not be my best look. So let's play that reversal bar game. If I get a reversal bar off of the areas inside of triggers, I'll take this trade. Because that represents a problem, I'll put a stop there or a target there. And just for grins, if I don't get stopped out, I'll see if it goes to the next fib. Now I'm on the good side of my triggers. Now my triggers are rolling and going up. This still has momentum. I still have my target in place. Nothing has changed in this trade for the worse. The only reason I would ever exit this trade is if I get a second lower divergence. And if that doesn't happen, I'm going to hold for my first target. Go! And if I get my first target, as I get close to that trouble area, maybe I'll take the risk off. Maybe I'll say, you know what? I don't want to lose at this point. Well, there's my first target. So now I'm into a fib. If I get a reversal bar, exit. If I don't, I'm going to keep going up with it. Hopefully to the next fib. Man, it keeps going. I'll keep dragging my stop. Because I know that a close on the wrong side of the triggers is a loss of momentum. So I'll let this one run until it doesn't want to run anymore. So until I get a close on the wrong side of the triggers, I refuse to exit this trade. I don't care what I hit, what I'm doing. Doesn't matter. Until it gives me a close, guys, I'm going the distance. And look at that. All I'm doing is chasing a reversal bar marker. Ah, and it just keeps going. Man, NASDAQ's fast. How do we feel about this one? I'm up $500. Guys, what I'm giving you is an awesome way to get more out of trades by forcing it to lose momentum. Boom, now I'm out. Anybody else catch it? Did that make sense? Still catching it, Belt? That's what I'm talking about. Just missed your stop. It may keep going. It is still going. You know what's cool though? Is I don't care. I'm done, dude. I made money. I made my money. I don't care what it does now. So if you're still in, awesome. If you got out, awesome. The key is you got to be in a trade if you're going to get paid, guys. And you have to have a plan so you can take the trade. Now I have weak triggers. Hate weak triggers. Anything can happen. Belt, you jumped in. You got out of trouble. Protected yourself. Can't go wrong. You got 270 locked in. Try to be mad about it. Try to be mad about $270 on your runner. Great trade, Belt. Guys, this is what I do every day of my life. I say, are my rules met? If yes, I take the trade. And if no, I sit on my hands. Steve, everything up. You let the back of the bar clear trouble. Odds favorable on both. Easy money, another $200. You take the trend trade. Easy money, $300. Guys, that is $505 in less than a minute. You can almost afford to live in San Diego now. Nice trading, Steve. Guys, I get giddy. I get so stinking happy when I see you find success with this software. Great job. I have weak triggers here. My triggers are weakening. I'm getting divergences. Just for grins, let's see if they decide to come back and retest that support that used to be resistance. You guys ever play this game? If it retraces, I wonder where it's likely to go. I don't have any areas inside of triggers anymore, so I don't have a trend trade. I'm not going to just trust a mid band to hold, and I don't know if it's going to be this fib, or it may just go up, or it might be any one of these. I don't know. Once I don't have anything inside of those triggers, guys, that's it. Let's go 330. So Marlon says, I'm going to the other side of the fib. To hell with those one-to-ones in that big red Fibonacci area. They better push through it to hit my target. You do you, Marlon. I know you have a plan. I don't get mad when you guys do things. Me personally, this represents an area that could jack up all my good times. But I don't have momentum. There's a mid band, but it's not inside of triggers. So maybe if I'm going to try to hope the mid band holds, I force a reversal bar. But I don't have momentum. And I don't have areas. There we go. There's my first trouble spot. Maybe I'll try to get paid at it. And then those one-to-ones represent my second trouble spot. I'll try to get paid there, but I don't have momentum, and I already have 3 divergences. So if I get another divergence, I'm going to get the hell out of this trade. If I don't, I'll hold it. But I don't have momentum. I didn't have an area inside of triggers. Do you see how all I'm doing is talking? And another divergence could be the death of me. So they tried to push down and failed. Maybe I'll tighten up right behind that little wick. Oh, so close. So close. They're going to get me? I'm on the good side of everything at this point. Man, I don't know. Might not. Nope, didn't get me. And look what divergence did. Zoom, baby, zoom. It's all about knowing why you're going to do what you do, guys. Odds favorable, 50-50. Why did you get in here and not at the areas? Andy, That's squirrely. That's your entry. You know that. I'm glad you met your goals. But you know that that's your entry. You let your large chart midband talk you into breaking your rules for your trend trade. No fib. It doesn't look like you have synthetics. Andy, where do your entries come from? Yeah, but mine are in my house, Wayne. Yours are in your house. And we might have different settings. So that was a quick little hit. I don't know, it printed. Which chart, Andy? Is your tick data on, Wayne? Yep, Andy, you just answered your question. Small chart's your entry chart. Areas are defined on the large chart. Entries come from the small chart. You can't just pull every area known to man and add them in. It's all right. You're good. Wayne, check your tick data. How many days back are you? And you're in Eastern time frame, yes? I don't know. It could be my data. It could be your data. Did you clean out all your data this morning? Did you sync your clock this morning? I'm just trying to see what I might have done differently than you. I synced my clock this morning. Maybe that did something with the midnight. Maybe we're 6 seconds off and that one tick made a difference, possibly. What you could do if you wanted to is just build another. Sometimes I'll do this. Like if I don't match up with my brother, I'll do this. I'll go new chart. NASDAQ, and then I'll build, a 34.5, and I'll go Nexgen Dynamic Renko, and I'll go 34.5, tick data, 10 days back, okay. And let's see if this one gets the fib. It could be me, Wayne. No, I've got it twice. So mine's consistent. Let me reload all my historical data. Maybe that'll make a change. So it's one of the nice things about having a faster computer is you can do stuff like this and it doesn't feel like it takes forever. So we'll see if reloading historical data changes it. Nope, I still have it. So the last thing I could do, Wayne, and you might want to try if it's unnerving to you, is go to Tools, Database Management, and you can reset and repair. You do have to disconnect, you got to close, you have to reboot. That would be my next thing. Like if it's going to create trust issues, that would be my next thing to do. But sometimes we're not going to line up. It could be as simple as a discrepancy or something in a tick. So always trade your charts. You had to go 12 days back? Right on. And that's Jason doing smart stuff that I don't understand. And guys, I am not the authority. There's a perfect crude oil trend trade. I am not the tech guy. I'll give you whatever I have, but I always encourage you guys, use Jason. I use Jason. If I don't know how to fix something, I'll bypass John Novak and I'll go to Jason. John knows how to fix it. I just don't like to bug him. I mean, that's what he's here for, guys. We got the best tech guy in the industry, and he's here for you. Did anybody, maybe you guys are still in it. Maybe it stopped you out. He is the wizard. I'm a huge Jason fan. Jason and I actually, we worked in the same restaurant 20 years ago. And my brother came through and harvested half the staff for his business. He took bartenders, he took waiters, he took everybody. And Jason's the one that survived. Jason's been with Nexgen for such a long time. Best in the business. All right. Odds favorable. Clear path. Marty, there's that split trigger look, right? Could go to either. Could go to the area inside. Could drop all the way down to the synthetics. I don't know which one it's going to be. Does that make sense, guys? It could go here, but it might also go all the way down here. Am I willing to put a stop here? Getting it at 38. Am I willing to put a stop at 32? 6 points. Me personally, I'm not. That's too much risk for me. I'd have a panic attack. I can't do that. Can't do it. So what can I do? I can wait for a confirmation bar, right? If I get a pullback to the area and it gives me an up bar, well, then my risk is established. Then it's not a $400 stop. All I do is I talk about advantages, I talk about disadvantages, and I make my decisions based on what I see, what my chart read is, what my plan says. That's all I can do. That's all you can do. You can't control the market. Well, it's a bouncy point, right, Belt? But it's not a termination condition. Look at this chart. Are you going to let a cute little 1-to-1 scare you? Hell no. What I'm hoping, Belt, what I'm hoping is that this little insignificant, not worry about it, 1-to-1 is exactly what I need to push me down to an entry. I hope it gives me just the bounce I need to get me into a trade with momentum and a clear path. Where do you see 50-50? I see odds favorable, and the mid-band's only a termination condition if these are a full bar away. This is high probability. The only challenge is my triggers aren't perfect. That's the only challenge in this trade, is that my triggers aren't perfect, that it could pull back to those triggers. So this is the range where I have to believe price could return. 61.35. You have a fib at 61.35? I don't have anything at 61.35. Yeah, different charts. And that's one of the things that happens. Like if you're in Mountain Belt, there's going to be times where it may feel like you have an advantage, and there may be times where it feels like I have an advantage. So yeah, if you have a 35 fib, absolutely this is 50-50. All the more reason to want less risk. What do you guys want to talk about? We are screeching into the home stretch. Yeah, so yours is definitely 50-50, right? And it's 50-50 from a bad bottom. It's a different look for sure. Definitely a different look. Been a pretty good day, guys. I think there have been some pretty good lessons today. I hope you're learning something. My goal is that you learn like one little thing every day, because if you do that every day, it's like losing weight, right? If you lose a pound a week, you're down 50 pounds at the end of the year. But if you wake up on Monday and say, I'm going to lose 50 pounds, by Friday you're pissed off that it didn't happen. Small victories, guys. Constant forward progress. And trading's like the cha-cha. You're barely versed in the HVA chart. No, Andy, I don't trade with a market flow chart. Wayne, I have absolutely no input for you on that, because look, in a strong downtrend, typically stays below it, and then in times of indecision, it weaves, and then a strong uptrend, it tends to stay above it. Awesome. Take care, Steve. So if it's weaving, what does that tell you? That they can't figure out what the hell they want to do. But I don't have any rules at all regarding the relationship of price to the midband. So just because it's above the midband doesn't mean I don't have a short, right? And just because it's below the midband doesn't mean that I don't have a long. How about if I just go back to my rules, and you'll notice that they don't say anything about where price is in relationship to a midband. It doesn't have anything. This doesn't even cover colors, right? It's just three things that I look for. And if I have them, I take a trade. And if I don't, I don't. That's it. Good question, though. There's things that I don't think about because they don't fit into my rules. There's things that I don't consider, like the 1-to-1 in the way when I have a high probability trend trade, because it doesn't work its way into my rules at all. So I could look at it, I could worry about it, but man, that's a lot of thought. We've got a few minutes, guys. That was a lot of up, right? All right, since NinjaTrader denied your corporate account, your mistake, and then your individual chart, probably from LLC denial, they indicated I can reapply in February. That's cool. Plenty of time to sim. Nothing to be done. There you go. Belt, do you have any other trading platforms that you use? One of the really popular ones is this one, the TradingView. I set up a NASDAQ chart that allows me to trade using some old school stuff. But the cool thing is check it out, is John Novak has created divergences, 1-to-1s, trigger lines. He's coded it. He's going to sell you guys this. So I have a plan where I could trade this, and I will pretty soon, because I've got to start trading going through. And John's going to, I know he's going to sell the indicators to give you guys as close to Nexgen as you want, but our browser version that hopefully will be out mid-end of January is going to be just like this. It's going to be just like TradingView. So the cool thing is, Belt, is that if he goes live on his browser version, you won't need NinjaTrader. And that may be a month or so. Probably not, Gary. Probably not. XRP is what that was, Marty. Jenny's got several thousand of them. I don't know what Ripple is. It's XRP, that's all I know. Doesn't say Ripple. It's crypto, yeah. I don't know yet, Gary. I don't know. The future is going to be not NinjaTrader, I'm guessing. Is my brother's got $1 million of his own money into programmers to build that new platform. And if it has everything that you guys are accustomed to, I would imagine eventually it may phase out a little bit, but the patterns are the patterns. The patterns aren't going to know the difference between NinjaTrader and all the other things that you can use. And if John is using something outside of NinjaTrader for Nexgen, he's going to make sure that it has everything that you understand. It won't magically change the rules because you're on a different platform. But I don't have the answers. I don't have the answers, guys. Anything I say is a guess. So I'm going to stop guessing. In anything that I say regarding the funding company, anything I say regarding the platform, anything I say regarding anything other than what I teach in this room, guys, is a guess and shouldn't be treated as gospel truth. Unless you hear it from John Novak, I just kind of regurgitate what he's talked about. Well, NinjaTrader has proven to be difficult for you to work with because you messed up. You made a mistake. And they didn't let you get away with it, and you find that difficult, I'm assuming. Right? You said it was your mistake. So I don't know that... I've never had a problem with them. Okay, so that's on you, not them, though, right? You know that they're governed by crazy strict rules. They're governed by crazy rules, and they have to adhere to those rules. You ever tried to buy a gun and you put the wrong answer? And even though it's the wrong answer, you go, hey, man, I put the wrong answer. You don't get to go back and change it. That's it. You get denied for a gun. Ask me how I know. And then anybody with your last name can't buy a gun because they think that they're buying it for you. Again, ask me how I know. So I don't know that that's difficult to work with. I just think sometimes we make mistakes, and God, I hate consequences, but they tend to be there. So that's not it. It has nothing to do with an inability to work with Ninja that I know of. It's just different. It's his, right? It's his baby. It's his puppy. It's his toys. And he's so proud of what he's accomplished in the last 30 years. Why not make it all yours? Why not be 100% self-sufficient on the things that you create and not rely on other vendors to run your genius, I guess. I don't know. You'd have to ask John. Good stuff, though.